Hi, my name is Sunny Singh, and before you read this entire article that I wrote, this is Summary with Sunny. So check it out. If you're not like me, maybe you read every day, think about it. Look at how much we read. We read articles, we read Facebook posts, we read Instagram posts, we read LinkedIn articles, we read for work, guidelines, all that stuff. Sometimes it's nice to just watch a video that'll help condense and summarize what the article's about. And that's this.
So you're self-employed, maybe running your own business, freelancing, or juggling a few income streams, and now you're ready to buy a home. But here's the thing. When you walk into a traditional bank, they start asking for W-2s, 2 years of tax returns, pay stubs, and suddenly you feel like you don't fit the mold. Sound familiar? That's where non-QM loans come in. Non-qualified mortgages are built for people just like you, those earning income in unconventional ways. And the process, it's not as intimidating as it sounds once you know what to expect. Think of non-QM mortgages as flexible home loans that look beyond the old school rules. You don't need perfect credit. You don't need a W-2. What you do need is a clear way to show you can repay the loan. Instead of pay stubs, lenders might look at your bank deposits over the past year or two, your 1099s, rental income, or even your investment accounts. The goal is to paint a full picture of your financial reality, not just what's on your tax return. So, what does that actually look like? If you're self-employed, you'll probably be asked for 12 to 24 months of personal or business bank statements. Contractors might use 1099s instead. And if you've got strong assets like savings, retirement funds, or investments, you could even qualify through something called asset depletion, where those balances count as income. Credit-wise, most programs are more forgiving. Some lenders can work with scores down to the 600s, and a few will even do manual underwriting if you don't have a traditional FICO history. Now, you'll still need a down payment, usually between 10 and 20%, and some reserves, meaning a few months of mortgage payments set aside in savings. But the overall process is about showing financial strength, not perfection. If you're getting ready to apply, here's what will make your life easier. First, get organized. Gather your documents early. Bank statements, IDS, business records, maybe a CPA letter. Digital copies are best. Second, work with a lender or broker who knows non-QM. Not every bank understands this type of lending, and experience matters. And finally, be transparent. If you've got income fluctuations or credit blips, explain them upfront. Lenders appreciate honesty. It speeds things up. So, if you're feeling boxed out by traditional mortgage rules, don't stress. Non-QM loans were designed to give people like you, entrepreneurs, gig workers, real estate investors, a fair shot at home ownership. And at KEES Lending, we help you navigate that process confidently from start to finish. If you're ready to learn more or want to see what you qualify for, reach out today or download our non-QM mortgage checklist. Let's make your path to home ownership clear, flexible, and built around you.